In the end, it's always about also accepting that it doesn't work all the time. I think that's something that I've seen, especially after working with other traders, is that making sure that you understand that there are trades that just look perfect and they don't work out, and that you're okay with that is helpful for your long-term development. Otherwise, what often happens is that the traders start tweaking stuff, trying to see, okay, this trade didn't work out, what would have made me avoid this losing trade? And then they adjust their strategy, but then you have a lot of problems with that as well.
I look at it and I say, listen, we're all going to make mistakes, but it's all about improving upon those. I think the common mistake that people make is that they see something running up or running down. Let's take the running up scenario. And when it's running up, slowly emotion starts to build in them. And they think, oh, well, if it's already up this much and it keeps going up every candle higher, let me jump on because it's going to continue up. And what I found is that by the time most people jump in, it's just about to go the other way. And the same thing on the sell side. When you get most panicked, that's where you actually start to see the bottom being in. So once the market flushes out the retail investor, that's where the bottom is in. So the biggest thing I would say to investors is learn how to read charts, because once you learn charts, it then takes the place of emotion. It's like, okay, well, is the chart at a level? No. Okay, well, I sit on the sidelines. I can just sit on my hands. Most investors want to overtrade. The less trades, I actually became more of a profitable trader when I traded less. And I know it's counterintuitive, but the less you take, the more kind of keen on the good setups you're going to take. And that means your win rate goes up, and ultimately you won't be fighting as many losers out there.
It is expectation. It is managing those expectations in people that this is a business. Businesses take time to get established. They have good times, they have lean times. There's no doubt in trading that you can make a great deal of money over the long term. There's no doubt about that at all. But I think, again, we come back to that word expectations. People think that they're going to buy the equivalent of a meme stock at 50 cents and sell it at $150. And what will happen is they'll buy the meme stock on Monday at 50 cents, and by Friday it'll be $150, and they'll sell it and they'll go buy an island somewhere. And whilst those sound like silly expectations, that is, I think, largely the expectation of traders/investors. I had a young lad here this morning, an electrician, just doing some work around the house. And the thing he wanted to talk about, Bitcoin, and how he was just going to keep buying it until it went up again. And I thought, okay, what happens if it never goes up again? And that had never entered into his head. That wasn't a consideration. His expectation was that it would just go up forever.
So trading, for a lot of people, it starts as a hobby. And that's very important to remember that, it does look like a hobby and does look like a video game, does look something cool that you do it on your phone and you post on TikTok or Instagram. But in reality, when you're dealing with real money, you have to remember that, you have to treat it as a business. It means that you have overhead costs, you have the operating costs, you have risk management. At the end of the month, you have to make sure how much you're gaining or losing. Is it worth your time? Are you beating the market? These are the questions that you have to ask. A lot of people are coming, they have some money, they buy some Apple, goes up, and they think they're a trader. But the question is, are you, for the amount of time and energy and overhead that you're putting in there, are you beating the market? Is it worth it or not? Just making money or losing money doesn't make you a trader. You have to look at it very systematically. How much capital do you need? Like opening up a restaurant. I need to buy this is my overhead. I have my staff. There are some good days, there are some bad days, there are some days that I have to close. There are some Christmas times that I sell really well. So all of these things are part of the trading as well. You have some days that are really good, you have days that are really bad. You have to have the right equipment, you have to update your equipment. So as you see, it's just exactly like a business, but it's an easier business to start. If you want to start a restaurant, it's much harder, but if you want to start a business in trading, you just open up an account and a computer and a couple of screens, and then you're good to go. But that doesn't mean that it's not a business. It's just easier to set up, but it's very complicated, and it's very important to take it very seriously.
All traders have periods of self-doubt. where you think to yourself, well, I can't even really buy a winning trade. I've forgotten what winning is like. And you do begin to doubt yourself. But one of the things I do when that occurs is I have a template for the instruments I trade. And I'll put that template up over various bits and pieces. And I'll put the time frame out to 10, 15, 20 years. And I'll just scroll through. And I go, well, it saw that breakout. It saw that one. It saw that one. It saw that one. And you begin to start to recover your sense of confidence that you can actually do it. One of the things about trading is it presents us with a number of paradoxes. In trading, you must be humble enough to admit that you make mistakes, you make errors, you get things wrong. But you've also got to be fantastically egotistical enough to think, screw that, I can do this. And so you're caught with a paradox. And you've always got to be working on this notion of that quiet confidence that you can actually do it. Look, to be honest, my observation over decades is it is not intellectual ability that stops people doing well. Never has been. Trading is very, very simple. If you can use a mobile phone, then you can trade. If you can reset the clock on your microwave, which is the hardest thing I have to do twice a year when daylight saving comes and goes, then you can trade. In terms of the fundamental practical aspects of it, anyone can spot an uptrend, anyone can spot a downtrend. It's having the sort of, I hate the expression emotional intelligence. I think it's a terribly wanker expression, but I can't think of a better one, where you've just got to have that maturity about you to be able to control yourself, because it's not the technical and intellectual aspects of trading that trip people up, not by any stretch of the imagination. It's always their emotional response to what's occurring. That's what blows accounts up. It's playing double or nothing. It's chasing losses. It's letting things decay to zero without taking any action whatsoever. And it is those things which are all emotionally driven, they're all psychological aspects, that determine whether you can or can't do this. It's not the system at all. The systems are just a crutch to get you to do something. Because by and large, anything that buys new highs and has risk control works. Now, if that's true, why can't everybody who follows these systems actually trade? And the reason is it comes back to the person who drives the damn system. If you can't control yourself, if you can't be disciplined, then you will struggle. You'll always struggle, no matter what system you have.
My discipline comes from wanting to do this and not forcing me to do things that I really don't want to do. It's still hard to do an ice bath, I can tell you that. So it's still hard running up the stairs, but that is more fun for me. And I want to come from a place of inspiration and motivation when taking my losses, when training and practicing to be disciplined in my trading. Why do I want to be disciplined? Because 90% of traders, they don't do that work that I do in terms of, practicing to be disciplined so that they can be disciplined in their trading. And I look at myself, and it's very self-indulgent, but who cares? It works for me like a hero, right? So I'm the 1% who does what is painful because I take my loss, or I manage myself around risk management, and I take pride in that. So it becomes my inspiration, my motivation for wanting to be disciplined. And that takes us to the conversation around self-image. And so who do I want to be? What lifestyle do I want to live? I want to live the lifestyle of a disciplined person. Why? Because I love it. Now, you will notice I don't show discipline in eating chocolates because I love chocolates. I'm not going to take that away from myself. But I balance it out with other disciplines. Like I don't eat cakes. I don't like cakes. They don't rock my boat. I don't eat a whole block of chocolate, but a piece, like one little row of chocolates. So that is what I would ask then my trader. Where in your life are you disciplined? That you then can translate into your trading? Or are you ill-disciplined everywhere in your life and then you're doomed in your trading?
So the first step why traders lose in the beginning is often they either have no process or they're having a process but they don't follow the process. So you have to make sure that the most important thing in the beginning is always work on your execution and try to make less mistakes. And you have to start obviously then at a place where you know what your trades are based on. So you write down your rules for your trades and you write down, okay, what does it take for me in entry? You can make like a checklist and then you can just go through every trade and compare to the checklist. Did the trade have all the points there or not? And then once you see that there's a deviation, then you can work on that. And I've seen that this is where you get the most bang for your buck. You see, or you work on breaking your rules less, and then you can have more consistency. You eliminate a lot of the noise in your trading, and that is going to bring you to a place where you don't have those really big outliers anymore. A lot of traders, when I see their journals, they have those crazy account balances. Their equity graphs go completely out of control, up and down, because they don't have risk management, they break their rules. And that's the first thing you need to fix. Make sure that you eliminate the noise, eliminate the big fluctuations, and that will bring you to a place where trading is not so emotional anymore. You're not always sweating, it's not always all on the line. And once you get to that place where you remove that noise, then you can work on the other stuff that's a little bit more advanced. But in the beginning, really make sure you have consistency, eliminate the noise, and try to break as few of your trading rules as possible.